Hello and welcome back to the Note. Well, during my first week at the FT, I was told that the first rule of journalism is not to be ashamed to admit ignorance. And unfortunately, I'm going to have to use that today. Now, the big event for the day was a very sharp sell-off in the Treasury bond market. This is the 2-year, most obviously affected by a possible rate rise from the Fed coming up on Thursday. And it's risen to its highest yield since early 2011, obviously a very significant sell-off. You also saw quite a significant and persistent sell-off for the 10-year bond. This is where I have to explain to you why that's happened and why I have to admit ignorance. If you look at the US stock market, the S&P actually had a pretty good day, implying that people weren't that concerned about a Fed rate hike. If you look at the Fed funds futures market, the probability of a rate rise ticked up very slightly indeed, but it's still only seen as a 30% probability, certainly not enough to explain what happened here. If you look at the macro data, we did have retail sales out this morning. They were generally quite strong. Retail sales data, while not being anything remarkable, I couldn't find anybody to suggest that they thought it had really changed the calculus for the Fed. As for news from overseas, well, in China, you actually had quite a nasty sell-off once more in the Shanghai Composite. People have been worried about the Chinese stock market. That looked somewhat worrying. Broadly, it's very hard to see much of a reason for quite such a dramatic sell-off, other than, and this is what our reporters have gleaned talking to a lot of people in dealing rooms trying to explain this, other than quite simply this was a quiet day. It's the second day of Rosh Hashanah, the Jewish New Year. Volume was thin anyway. Volume tends to be extremely thin by historical standards because there is less buying around when people want to sell. There was just enough of a catalyst to create a very big sell-off in bonds. This shows, this underlying lack of liquidity shows why people are so nervous about what could happen when the Fed really does raise rates. Even the smallest catalyst can be magnified. Think what happens when we actually get the first rate rise in 9 years.